June 16th, 2026. We're going to look at a particular stock, and then I'm going to show you why I am looking at a bull long position over the next 12 months. This is a 12-month forecast for ticker symbol CSGP. Right now, we're looking at a price of just around $32. June 16th, 2026. Here's the daily chart. Here are previous regions of liquidity that are important, but what is this blue line, do you think? What's this blue line right here? This blue line is a very critical level from 2019. And when you really just look at it in terms of a monthly chart as well, if you look at that was the daily I was just looking at with you. But look at this monthly chart, okay? Look at this. Why is it selling off so much, you might ask? It's because the market is crazy. Sometimes companies sell off a lot, sometimes they sell off a little bit. Doesn't matter. All that matters is that you need to be able to observe points of interest, levels of interest, and see how the market reacts. So this is my 12-month forecast from this point. $32 a share. This is a buy. And we're expecting it to go where in 12 months? Well, we're going to look at that right now. Here's the weekly chart. I'm anticipating this to reach this area of liquidity. I'm expecting and I'm planning for one of my trades will be as soon as we break out of this range here and start to play around in this region. I'm going to look for a breakout of this region. This is what I'm anticipating over the next 12 months. And we're going to see. We're going to see how it plays out. Now, we're going to get into the important thing. Why do I think this? What is the actual logic behind the situation? What is the reasoning behind that? So we're going to get to that right now, and here it is. We've got a lot of interesting points to look at here, but CoStar is the leader in terms of one thing: cash flow, money, revenue, profitability. We're going to go over these bullet points here, and then that'll be the end of this forecast video for ticker symbol CSGP. The first thing is the turnaround window. CoStar has spent the last few years aggressively burning cash to scale Homes.com. They purchased Homes.com. We are now entering the exact window where the heavy front-loaded spending peaks and starts converting into high-margin revenue. In their Q1 earnings, revenue jumped from 22% year over year to $897 million, and the adjusted EBITDA doubled to $132 million. Okay, that is extremely positive news for a well-formed company that has sold off so much. We now are hearing that they're not only buying Homes.com, but that they're turning it into revenue. That's good. Second point, the structural margin play. Management is guiding toward the residential segment, flipping to positive EBITDA. As Homes.com transitions from a pure capital sink into a profitable subscription engine, CoStar's overall operating margins are projected to expand rapidly from the mid-teens back to 28%. Final point, extremely low structural risk. They have over $1.3 billion in cash on the balance sheet right now. They have a dominant commercial data monopoly through LoopNet, and that acts as an unconditional cash cow and a $1.5 billion active share buyback program supporting its floor. I'm not saying that I know the future, but I'm saying that when you see a floor, so I'm not saying I can tell the future, but I am saying you need to be able to anticipate floors when they appear. If you're the market, not if you're you, but if you're the market, where would the market start to think that floors exist? Okay, where would they anticipate these floors to be? Okay, we're there right now. That's where you are right now. You are here. So with that much being said, I will see you in the next one, and I'll see you in 12 months. We'll see how this plays out. Take care now.